In the world of trade finance, trade receivables have historically been manual, fragmented, and known to be somewhat high risk. But now, automation is changing everything: how investors perceive the market and how investors can access and manage trade receivables.
With technology, we can now automate the end-to-end origination, underwriting, and securitization process, thereby really transforming pools of receivables that represent high-yielding investment opportunities, originated by supervised institutions such as bank, factoring companies, SME funding platforms, sometimes also B2B marketplaces, and bringing those receivables to structured credit investors in a way that is protecting them, using credit insurance in the middle, but also junior tranching in the ABS structure. This is what we achieved with Tradeteq.
We stand at a tipping point where technology can actually bridge that gap between trade finance and structured credit. But how really does automation make trade receivables investable? And what does this mean for institutional investors? Let's examine the Tradeteq proposition.
Tradeteq provides an end-to-end infrastructure that takes thousands of instruments and repackages them into one single deliverable investment product. We automate all the underlying processes. So that's everything from the data ingestion, the filtering, the reconciliation, the reporting that is available on demand. But also we have done some standardizations around the repackaging. So we can now very easily, very programmatic, create notes. We have done more than 120 notes as of today, more than $4.1 billion worth of instruments that we have issued so far. So trade finance comes with a number of idiosyncratic risks. Obviously there's credit risk, there's dilution risk, there's fraud risk. But what a lot of market participants have not really been able to solve is the operational risk as well as the utilization risk. So what that means is if I run a securitization, I have 100 million invested into a note, I obviously want to have that portfolio fully utilized. I also want to make sure that I know at all times what instruments I have at play. And that is actually not so easy to solve for trade finance because of the complexity of the asset class. And this is exactly what Tradeteq has done through a full workflow automation that now mitigates those risk elements.
Trade receivables finance is no longer a challenge without a solution. It's an opportunity. But this isn't just about automation. It's about unlocking a new asset class. And the pioneers are already moving in. Ready to see how automation unlocks value? Stay tuned for our next video to find out more.